Hello everybody, Wilson here. I hope you guys are doing well, having a great day or a great night. And before jumping to the charts, don't forget to smash the like button, share with your friends, and subscribe as well. Remember, we are exchanging and together we keep growing. So let's take a closer look first on the bigger picture. As always, let's see where ZIL stopped and what we may expect next. Just a moment. As you guys know the drill, I always draw everything from the scratch, and today we are going to use two charts as well. Okay, let me take out this one here. Yep. So let's go, because right now, a lot of people out there, they are always looking for straight moves up and straight moves down, and that's not how the markets behave, especially crypto. After all this time, with more professional people engaged, the price behavior changing, and we have to get updated, right? So as you guys can see, this range right here, it's the 50% on the whole picture. Okay, so from the all-time highs to the bottom, that's the 50% price average. Okay, let's take note here. Just a moment. Okay, so the great news is, let's take a measure here. I don't remember from the last video. So 90, 90% retrace. Okay, so that's very aggressive. And like I said in the previous video, I don't believe we are going to come even close to the bottom here. Okay, I don't believe, but almost everything is always possible. Okay, so we are always address all the possible scenarios. So another important thing here, we made it a higher high compared with the previous highs. So this is bullish. This is a great signal. But the things that we have to look for now is this. Like I said, we are not going down in a straight move or not going up in a straight move. That's not how the markets behave. As you guys can see, the assets always move in structures. Some are complete, others are incomplete, but that's how everything moves. Okay. So for example here, I don't remember if you guys saw, I don't know if you guys saw my previous videos on ZIL, but if you take a look and you remember my method, so all-time highs, the battle of midway, and our bottom. And as you guys can see, right in the midway, we developed a big structure before continuation. So this is one of the ways in how the assets keep moving. Okay, because sometimes people are bullish and they say, well, this is it, now it's our never, we are going. No, it's not like this. For example, if we measure here, it's a 1000% move up. I believe it's a bit more, but again, folks, that's a hell of gains. So very strong move. As you guys can see, all the way parabolic, no stop, no place for a small retrace or a healthy pullback before continuation. And at some point, people are going to take profits. And if the same people is the ones who pumped, we will have to see some kind of bearish activity, you name it. Okay, but yeah, so for example here, there is nothing clear yet. Okay, we are going to take a better look on the candles on a higher time frame. But yeah, let's take a look on volume. We had a big spike on volume right on top. Okay, so this is FOMO. People that, like I said, believe that it's going to parabolic. And the thing here is, it is possible to see a parabolic move. Yes, it is possible, and we are going to see. But this kind of move, bang, 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 is not that moon slingshot that people are waiting for. That one still to come, okay? And how I know that? Because that kind of move, it's something very, very aggressive and impulsive. And right after, we see a strong health pullback for maybe days or weeks, and then another strong move up. And then maybe you can say, well, but this move is a strong move up. Yes, but you can see by the size of the candles and the time length. Can you guys see? It took a lot of time since March. So March, April, May, June, July. And the kind of move you're looking for, it's very impulsive, okay? Like from nowhere. And I believe we are still to see this kind of moves in crypto again, but I don't believe it is right now, okay? And so let's take a closer look here, but I believe it's better to do in the other chart. Okay, so let's keep going here for a while before jumping to the other one. So what I expect here, folks, like I said, this range, it's the 50% for the whole move, okay? And these levels, they are like magnetic, okay? There is attraction to these levels always, not only for ZIL or other crypto, it's for any asset out there. So it's a nature law, okay? So let's talk about a possible bullish scenario here, okay? So for volume, after the big one, we didn't had bullish continuation. The buyers faded away, which is natural to see, especially at a very strong resistance level, okay? This is one of the reasons that we know the smart money don't buy resistance levels, okay? They wait to do their move. And right after, some people taking profits. So this is not bearish activity. This is actually people taking profits. And we can see start the buyer's volume increasing again, already outperforming the seller's volume, which is good news. But let's take a quick look on OBV. Okay, so there is nothing new on OBV. OBV is still fantastic. It's all the way bullish. This is great news for ZIL. But yeah, let's go. So what I am expecting here for a bullish perspective, okay? We will keep trading inside this range. As you guys can see, the axis is going to be, or at least close, the 50%, okay? And so the thing here is, in my humble opinion, I can be wrong. Oh, yes, of course. But the idea here for this range, it doesn't mean it has to be symmetrical, okay? This kind of move is not natural to cryptocurrencies due to the low volume and volatility as well. So that's one of the reasons we are always ending up with triangles. Okay, so this is one of the nature side of this kind of patterns and behavior and etc. So in my opinion, if we are able to make strong moves above the 50, doesn't matter how much we retrace, okay? What we don't need is a flat floor and very low marginal lower highs, okay? Because it can print a descending triangle and flat bottoms with descending highs, it's all the way bearish, okay? But it's still possible to see a bull break, but it demands a lot of more money and momentum as well. because the bulls in the sidelines, they know, they address the risk reward on this kind of scenarios. So that's not a wild call for all the bulls. Okay, so this is a possible scenario for the bullish continuation. And some folks out there, they say, just for you guys to have a better idea here, let me see if I can do it. No, I won't be able to do, but just for the sake of this example, let's say this is a bull flag, which is not, okay, just for the sake of this example. And they make a straight line here, and then they will do something like this. Of course, it's not like this one, but they are going to move the line from this axis here to the top axis. So that's should look something like this. Okay, and so this is not accurate. Okay, this is a very poor way to measure price expansion. We have tools and a method to do so, but yeah, so don't trust this kind of approach, okay, because it's not accurate and doesn't play out like people expect. Especially, so just for you guys to have an idea, let's say this is a bull flag, okay, just for the sake of this example, and then we break bullish, and then they use the same format, okay, but actually we don't go as high as it should go, and then we go back, and then we go bang bang bang, then we go back. These folks, that's how rising wedges and bearish patterns develop. So this kind of approach, again, is not okay, because can create unnecessary bias, and you can stay in the wrong side of the trade or also the analysis. So now let's jump into the other chart. And yes, let's take a look on these candles here. So this is the monthly chart, okay? This one here that we were working, it's the weekly. There is no monthly charts on Coin Paprika. So as you guys can see, the previous candle for the June ended up in a bearish way, okay? It's around 80% rejection, but we had a positive trigger here at 3 cents, which is great news. And again, it's a higher high compared with the previous ones, okay? So fantastic news, but the problem is it's a sign of exhaustion already, okay? And despite the bulls made their way to close above the previous level, that is 00172, it doesn't mean we will have bullish follow through, okay? Especially inside rejection, because rejection, it's a red sign. It's actually a call for the bears. It's bearish territory, okay? Unless we are able to claim those levels, as you guys can see, there is a lot of rejection on this range. So the bulls have to close above and defend, okay? And again, all these kind of moves up non-stop, at some point the bulls will lose steam. So that's a fact, we like or not. But so far, let's work with what we have. Let's take a closer look here. So this is the classical scenario when people buy or long supports. Okay, the problem with this kind of approach, it's we don't know if we are going to have bullish continuation, bullish follow through. Okay, and we saw already this kind of behavior where people keep buying the support, keep buying, and we end up with no follow through at all, and then we end up in a bear break. Okay, so and also this candle is a small bearish spinning top, but it's just the beginning of the month, so not a big deal. And as you guys can see here in the past, we managed to close above many moves, ending up in rejection. And this one right here was a lower high, inside rejection. Okay, so basically every time we trade inside rejection, it's bad business. Okay, so just for example here in the bottom, why the bears let it go after all this rejection? Because when we had the open of this new candle here, you guys can see we had a very small move down, very small, and then right after breached the previous candle, because it's dangerous and it's not worth the risk reward to keep trading inside rejections. Okay, so this is something very important to watch. Now let's jump into the weekly. Okay, so here is the scenario that we are talking about. Here is the bad candle, the shooting star, all the way bearish. Not a lot of traction from the bears. It looks like they are not looking to keep selling or shorting around this support here because it's too close and they know it. 00172, and just like we talked, the bulls bought the support. And now the question, the $1 million question is, are they going to keep pushing? Otherwise, it's just dust in the wind. Okay. Let's take a closer look again. 3 days. Yeah, so here. So after this one, the first one, we didn't have follow through, which was bad. And then we end up with another retest. Okay, so the bears checking if the bulls were really there waiting to buy. And then we had a strong candle with full shadow in the previous bearish candle. And right after, excuse me, I believe this red candle here is based on Bitcoin behavior. Okay, so the point here is the bulls needed a strong move up, but it doesn't have to be a high compared with this one. And a double top can be all the way bearish. Okay, so all the odds that we have for a bullish perspective, let's go into the daily, it will be better. Yeah, so all the odds that we have for the bulls to do their stuff because they are still in control, okay, so far, the same odds they have, the bears also have the same odds right now. It's a 50% battle at the 50% range, okay, and then we are going to see who has more firepower. And for example, this scenario right here can play out like this: a loser Sali, which is a lower high compared with the previous one, or we can end up with a double top. If people FOMO again, FOMO can be a problem because this can give more clarity and reason for the bears to step in again and short. Okay, and so a moderate scenario here goes and make a lower high. That's it. And then leave room for the bears to do their thing, but stay close and defend the previous low as well. Okay, so this is a way the bulls can develop their progress. But yeah, so far we still don't have any evidence. Okay, we don't have it any, and we are going to see how this is going to play out. Let's take a look on the 4 hours. So there is a thing here about the theory I'm working on, the mirrored trend. Let me show you. So this is one way. It's like it's nothing new. Okay, it's nothing new in technical analysis. It's just a tool to help people who are new into investment or trade or technical analysis to have a better understanding of what is happening. Okay, so for example, let me show you. Just give you an example. Of course, this is not everything. I'm just making in a easy way, so you guys can follow me. So you guys can see the lines. They start aggressive, and then they start to bend, and then there is the cross point. Okay, and this cross point, this is not 100%, okay, folks? So this is just one way to add more clues for our analysis. And this cross point can be the pivot that we are looking for that bullish activity. Okay, so this is called a broken mirror. And this kind of behavior here was bullish in my opinion. So this is the micro time frame. Okay, we are talking about a 4 hours chart, which will give us 4 hours perspective. Okay, have this in mind. And this bull break here was not phenomenal, not the best one, but was able to make a new high compared with the previous one. So this is good news. It's not enough, okay? It would be way better to have one higher compared with this one here, okay? But let's see how this is going to play out. For now, there is nothing clear, okay? And the same way, just a moment. So the same way we are not expecting for straight moves down, at least not from here, okay? It is possible, yes, from the bottom and the top perspective, but it's not likely to happen. So expect something. For example, if we keep going, just like other coins and tokens did, just for you guys to have an idea, okay? Let me see if I can better explain it. So if we keep going up like this, not actually like this one, but just a second. Okay, so if we keep going up like this, there is a problem. And this problem is, this is a bad bullish behavior. There is no strength, it's very slow, very small, and the chances to end up with a bear break is very high. And despite some people calling this kind of structure bullish, it is not, okay? Because it's too narrow. This is a 4 hour chart, and the catch up will take a long time. And the bears have all the way to keep filling their bags before making their sell. Okay, so they are waiting patiently at the previous highs. Not at this one here because it's too close, but for these ones here, they are triggered. Okay, and also again, this way to keep going up is not bullish, is not healthy. Okay, we already saw this kind of behavior many times in the past. Now let's take a quick look for Fibonacci here, see how it is going. So as you guys can see, we end up rejected from the golden, but we have a trigger, but it's not the best scenario. A much better scenario would be close above, then we fall back. It doesn't matter if we go below, okay? The thing is, stronger moves above and then come back. It's a much better scenario, okay? But in the longer time frame here, what we are expecting is closes above the 50%. This is the big deal for ZIL right now. If ZIL keep trading with small highs and below the golden, it's going to be all the way bad, okay? Because the buyers will keep finding value on the previous quote support areas without follow through, keep developing lower highs all the way bearish. The bears will jump in and do their stuff. Okay, so folks, I believe this is it for now. You guys know I always keep updating ZIL, and I will be watching, and any news, any change in the bigger picture, I will let you guys know, okay? So thanks for your time, thanks for your patience. Uh, don't forget to smash the like button, please. Support my work. And this is it. I will see you guys soon. See ya.